Oil prices extended their decline on Thursday, falling to levels last seen before the outbreak of the Iran war, as expectations of increased Middle Eastern supply outweighed concerns about global demand. Brent crude futures for August delivery dropped $1.22, or 1.65%, to $72.52 a barrel, while U.S. West Texas Intermediate crude fell $1.02, or 1.45%, to $69.32 a barrel. Both benchmarks touched their lowest levels since February 27. The market's downward momentum was reinforced by signs of abundant short-term supply, with August Brent trading below the September contract. Analysts said traders were increasingly pricing in a faster-than-expected return of Middle Eastern oil exports following the recent ceasefire agreement between the United States and Iran. Brent crude had already fallen more than $3 on Wednesday, while WTI settled nearly $3 lower as concerns over supply disruptions continued to ease. U.S. Energy Secretary Chris Wright said oil flows through the Strait of Hormuz had almost returned to pre-war levels, noting that at least 20 million barrels passed through the strategic waterway in the previous 24 hours. He added that complete normalization could take several weeks as demining operations continue. The resumption of shipping traffic, combined with expectations that Iran will increase oil exports following temporary relief from U.S. sanctions, has put further downward pressure on global crude prices. The initial agreement reached last week ended the U.S.-Israeli war with Iran and reopened the Strait of Hormuz, while launching a 60-day negotiation period focused on more contentious issues, including Tehran's nuclear program. Wright said oil would continue flowing through the strait even if negotiations encountered difficulties and argued that Iran would be unable to close the waterway again. Regional efforts to stabilize maritime traffic have also accelerated. Oman has opened temporary routes to facilitate tanker movements through the Strait of Hormuz, while Omani authorities and the International Maritime Organization are coordinating vessel traffic. Qatar's Prime Minister also visited Oman for discussions on the future management of the strategic passage with Iran, Iraq, and Gulf states. Analysts at Macquarie said oil markets were likely to normalize rapidly as supply chains adjust and shipping activity fully resumes. The bank forecasts average third-quarter prices of $67 per barrel for Brent and $62 per barrel for WTI, significantly lower than second-quarter averages of $94 and $87 per barrel, respectively. Meanwhile, U.S. government data showed domestic crude inventories fell to their lowest level since 1984 last week, driven by strong refinery demand and releases from the Strategic Petroleum Reserve. However, traders largely ignored the inventory data, focusing instead on developments surrounding the Strait of Hormuz and the prospect of increased Middle Eastern supply.